Kevin Hincks live at the CBOE pre-bell playbook. We're pretty busy getting ready for more comments, and we had Fed speak yesterday from Jay Powell. Some of your thoughts?
Well, you know, the market was looking a bit fatigued to start with. But then Jerome Powell came up to the podium in Rhode Island, and basically, here's the three words that everyone's talking about this morning from his speech. He said stocks are fairly highly valued. And so that's the term, that's the phrase that I think made the market weaken and sell off slightly on the downside. Wasn't significant sell off, but it certainly didn't help the overall market. He also talked about the economic picture. You know, he talked about weighing overall inflation risk with the weakening labor market. He thought rate cuts, you know, lower future rate cuts aren't a given. It'll depend on the data. He talked about inflation. He talked about, like I said, tariffs and their role on inflation. But all things considered, he did basically his version of the irrational exuberance speech when he said fairly highly valued for stocks, and that caused a bit of uncertainty in the overall market, Nicole.
Yeah, I think all us old heads really appreciated the irrational exuberance comparison. It certainly was our moment. I thought that was interesting this morning as well. Mary Daly today, right?
Yes, more Fed speakers. Like we've been talking about, a kind of a consistent theme for this week is lots and lots of Fed speakers. Only Mary Daly on the docket today, but that doesn't mean Scott Bessent has made some comments this morning on television that are making headlines. So yeah, there'll be a lot of commentary, I think, from not only Fed speakers, but the Trump administration as well on the overall market. And the market will have to, as usual, consume and digest just that, Nicole.
Yeah, understood. I mean, we think about the housing market. Last week we saw mortgage apps getting a jump. Also, refis got a jump as we saw rates come down. What are we looking at here?
Good news, more good news from mortgage applications this morning. The purchases up 0.3%, not as big as the numbers that we've seen the last couple of weeks. Remember, last week purchases up 2.9%, this week up 0.3%, but over the last 12 months, up 18%. Refinances, remember, last week they were up 24.4%. This week up 0.8, but up 42% year over year. Here's the thing. Rates continue to move to the downside. Conforming loans with 806,500 or less, the rate there moved from 6.39 to 6.34. Jumbo loan balances, 806,500 and above, went from 6.48% to 6.44. So rates are inching lower, away from 7%, moving now towards 6%. So we'll see what that does to the market. Remember, in about an hour or so, we'll get new home sales expected to go from 652,000, pretty close, 649, 650 is what they're looking for there. So we get existing home sales tomorrow morning. So yeah, a bit of housing data for midweek, Nicole.
Yeah, and then GDP and PCE later in the week, jobless claims. So we're waiting on all of that because everybody's expecting 2 more cuts from the Fed. And obviously, we know the Fed's going to be somewhat data dependent. They say they're data dependent, so we'll see. Kevin Hincks, thank you so much. Great to see you this morning.